So let's continue with chapter 9. We're going to look at some subsidiary ledgers and posting our transactions and returns. So here we have Art. It's a wholesale clothing company, and they buy merchandise from suppliers and turn around and resell it to retailers. And so we've got the transactions here. We sold on account to Hal's clothing store, then we turned around and sold to Bevan's company, then Bevan returned some merchandise, then we sold on account to Row Company twice, then we sold on account to Mel's department store twice. Now, obviously, all these sales on accounts, we're debiting accounts receivable. Every time we sell these, we credit accounts receivable for the sales return. But notice that all of these are they're to different companies. And so I don't want to just know what is accounts receivable in total. I want to know how much Hal owes me versus how much Bevan owes me versus how much Roe owes me versus how much Mel owes me. So this is where I'm going to keep what we call a subsidiary ledger. So first of all, let's look at the sales invoice. So here on the sales invoice, this is just an invoice to Hal's clothing store. I can show exactly what date Hal purchased from me. I can show exactly what he purchased, what the unit price, what the total price is, if there's any sales tax or shipping that would appear on here, as well as any credit terms. So I can see that I offered Hal terms 210 net 30. And notice I have my date on here as well, so I know he has to pay, by the way, by April 13th to get that discount, right? So when I sold this to Hal, I debited accounts receivable and I credited sales revenue. But notice I put accounts receivable, comma, Hal's clothing, or sometimes you may see a slash or a dash. But I've delineated that this is accounts receivable for Hal versus accounts receivable for Roe or Bevan or any of my other companies that I routinely do business with. So that we have what we call an accounts receivable subsidiary ledger or subledger. So this is a special ledger that just contains accounts receivable accounts, but it basically has, think of it as separate little bitty tiny accounts receivable accounts for every customer that I do business with. So when I get something, when I sell an account or get a return or get a payment, I'm going to post it to the big corporate, massive giant umbrella accounts receivable account, as well as the little bitty individual accounts receivable account to update that customer's individual record. So notice I want to point out you have to post twice. You have to post to the general ledger, the accounts receivable big T account, as well as the subsidiary ledger, the individual T account. So here I see I have accounts receivable T account here. And notice now I've got my subledgers for Roe and Mel and Hal and Bevan's company. And these are the subledgers. Now the thing is the sum of the balances in the subledgers always equals the balance in the accounts receivable account. This is called the control account or the controlling account. So this balance in the controlling account always equals the sum of the subsidiary ledgers. So again, the general ledger account is called the control account, and the totals have to equal. So the total of the subsidiary ledgers has to equal the balance in the control account. So here's our journal entries that we made before posting, and these are, I can see my accounts receivable sales to Hal's company, and then I debited cost of goods sold, credit inventory, and then there's a debit to accounts receivable, credit sales, and a debit to cost of goods sold, credit inventory for Bevan's company. I've got my sales return, debit sales return, credit accounts receivable for Bevan's company, debit inventory, credit cost of goods sold. I've got my entries for Roe and my entries for Mel's department store. So these are all of the correct entries for those transactions we looked at earlier. And now I'm going to post them. So notice when I post to accounts receivable, or I post the accounts receivable account in the post draft column, I'm going to put two things. So first of all, I'm going to put the account number of the general ledger account. So here I can see the accounts receivable general ledger account is number 113, and I can see I posted a debit for $800. And so that 113 goes up here. But then also there's a check mark here, and the check mark means that, by the way, I've also put this in the sub ledger. So I've posted it both places, to the general ledger account and to the sub ledger. So here I can see that I've done that for every company. So here's Bevan's company, where I debited for $1,600, and then they had a sales return for $600. I've got my post from Hal, my post from Mel, my post from Roe. And notice if I add up all of these balances, they equal the balance in the control account. Now, a credit memorandum is what we send to a customer after there's been a sales return. So once we're going to credit their account, we're going to credit their accounts receivable because there was a sales return. I'll send them a credit memorandum that just says, hey, I've credited your account. I've reduced the amount that you owe me. So here's a credit memorandum from that sales return from Art that says, hey, I'm going to give you credit back for $600. So we've already looked, we're going to debit sales returns and allowances, that contra revenue account. We're going to credit accounts receivable to reduce the asset. We're going to debit inventory, assuming it can be resold, and credit cost of goods sold to undo that second entry. And then here I see that entry posted out here. Now notice when I posted the accounts receivable, I again posted it both places, to the general ledger account and to the sub ledger.